Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Thursday, July 3rd, and we're in the middle of the U.S. session. The non-farm payroll was released on Thursday this week instead of Friday because July 4th will be a national holiday for the U.S. The non-farm payroll data surged in June, surpassing May's readings and blasting forecasts. The unemployment rate dropped to 6.1%, down from the 6.3% reading in May, and forecasts did not call for a change. You see here the US dollar index showed that the US dollar popped up after the non-farm payroll release, but is now held at the falling trend line coming down from June's high near 81. A break below 80.35 right here will be needed to show a bullish breakout and expose the June high again. You see it would also clear this 200 moving average in the 4-hour chart. And we also want to see the RSI push above 70 in this 4-hour chart to show presence of bullish momentum. So these factors aren't there yet, and if price fails to break higher and instead breaks below 80, then we should be looking for continuing US dollar weakness going into next week. The euro dollar fell below a rising trend line after the non-farm payroll data. However, a break below 1.36 might be needed to convince traders of a bearish continuation, at least towards the June's lows between 1.3505 and 1.3520, and maybe even the 2014 low at 1.3476 as well. An additional clue could be a pullback that fails to break above the 1.3640, 1.3650 area, which is a recent support resistance pivot. A break above 1.3650, I would say even maybe wait for a break above 1.3665. If that happens, that would show that this is a false breakdown, which in and of itself would be a bullish signal. The US dollar Japanese yen pair popped up above June's falling trend line and above the 102 level, which has been a price the market has been oscillating around since May. If price can now hold above 102 on a pullback, then the bullish outlook remains in play with the 102.80 to 103 level in sight. When you look at the daily chart, you see that this is where this is basically the consolidation resistance since May, or even April, excuse me. And you see if price gets up there, it will likely be challenged by this falling trend line from the beginning of the year. So key resistance ahead in June's and May's high here, 102.80, 103. Now going back to the 4-hour chart, if price fails to stay above 102, if it falls below 101.80, we're likely to see this as a false breakout, which is a bearish signal, and then we would be looking at the lows. Going back to the daily chart, we'll be going back to these lows here, 101. Let me draw the trend line here, or the support here, 175 up to maybe around 101. The pound dollar was resilient after the initial dip. Traders defended the 1.71 area, and the 4-hour chart still looks very strong. The bullish market is still in play. A break below 1.71 at least, and a break below this rising trend line will be needed to suggest consolidation. However, if that doesn't happen, this bullish trend remains intact, and there's still room to run towards the 1.7335, 1.7340 level, which I'll show you on the monthly chart, is the 50% retracement of this dip from 2.1161 to 1.3514 during the financial crisis. So still some room to run towards 7335 area if it can hold above 1.71. Gold price in US dollar fell after the non-farm payroll release, but just like the sterling pound, it bounced right back after the initial reaction. Even though this dip has invalidated the breakout here, it does not necessarily point towards a reversal of the uptrend we've seen in June. A break below 1306 will be needed at least to suggest some consolidation. But for now, gold still has this bullish bias. You see the RSI in this 4-hour chart hold above 40 after going above 80, so that's a very bullish that's a maintenance of the bullish momentum. So to the upside, if it does hold above 1306 and pushes above these highs here around 1332, then to the upside, our next key resistance to monitor is around 1342. I mean 1342.40. And that wraps up today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at forexminute.com. Trade well, trade safe.